What's going on, everybody, and welcome back to InvestQ. And quick disclosure, the paid promotion label refers only to affiliate promotions on this channel, the one that you see on the top left corner of the video. None of the companies that I cover pay me for my stock analysis, and everything discussed is based on publicly available information, my own research and opinions, and none of this is financial advice. So, getting into the video today, we need to talk about Inflection, ticker symbol INFQ, because the company just made a pretty unusual update to its second quarter 2026 financial results. And at first glance, this actually looks extremely positive. And Inflection, it did increase its reported Q2 revenue from approximately $12.6 million to $13.5 million. And its full year 2026 revenue outlook increased from approximately $43 million to $45.1 million. And that puts updated Q2 revenue growth at approximately 157% year over year. Now, there is a very important catch here that I want to mention. This is not an additional $900,000 of new business suddenly generated during the quarter. And the higher full year outlook does not appear to represent stronger underlying demand than management previously expected. Instead, these changes came from an accounting adjustment involving the timing of revenue recognition on two government contracts. So today, I want to break down exactly what happened, why Inflection changed its numbers, and what the updated financial statements tell us about the business, and why there are both some genuinely impressive numbers and some major risks investors need to keep in mind. So let's start off with the most important part of this update. On August 17th, Inflection announced it had filed a Form 12B-25, which is a notification of late filing, and it updated its Q2. Its Q2 results. Form right here. Yeah, right there, per the headline, the Form 12B-25. And according to the company, it identified what it describes as an immaterial adjustment related to two government contracts. And revenue that was associated with those contracts had previously been recorded in earlier periods. And after reviewing the accounting, Inflection shifted some of that revenue recognition between periods. And this is why Q2 revenue changed from approximately $12.6 million to $13.5 million, and it also resulted in full year 2026 revenue guidance from approximately $43 million to $45.1 million. And again, if there's any corrections or anything I'm getting wrong, please let me know in the comment section below. But according to my research, this is what I see the information is telling us shareholders and investors. And the one thing that I think investors do need to understand, in my own personal opinion, is Inflection. It specifically said that the increases are offset by corresponding reduction in revenue recognized during 2024 and 2025. So this isn't $2.1 million of brand new revenue that suddenly appeared, because it's primarily a question, I think it's primarily a question of when the revenue should have been recognized from an accounting standpoint, and management says there is no impact to cash or the underlying fundamentals of the business. Now, CEO Matt Kinsella, right here. CEO Matt Kinsella, he did describe this as an accounting adjustment related to two contracts that shifted the timing of revenue recognition between periods with no impact to cash. So I would personally be careful about interpreting the increased guidance as a traditional guidance raise. And technically speaking, the reported 2026 revenue outlook increased, but economically, that's very different from management raising guidance because customer demand, bookings, or contract activity came in better than expected. Now, with that being said, the growth that we did see in Q2, it still was impressive, in my opinion. It still was impressive, and with that clarification out of the way, the updated Q2 numbers are still worth looking at, per the headlines that we see here, because again, Inflection reported approximately 13. It reported roughly $13.5 million. Let me actually go to the actual. Yeah, here we go. Let me scroll. Yeah, so $13.5 million in Q2 revenue compared with approximately $5.2 million from the fiscal year of 2025. Again, that signals approximately 150% growth year over year. Again, pretty big difference from the 2 years. And according to management, that growth was 100% organic and entirely from quantum. And that last part to me is particularly interesting because Inflection isn't simply telling investors that it has potentially valuable quantum technology. It is generating actual revenue from the quantum side of the business, and that revenue more than doubled over the year. And for the first 6 months of 2026 revenue, it did reach approximately $23.4 million compared with roughly $13.5 million during the same period of the year. Now, again, you can see all this right here in the total revenues. Again, 3 months ended and 6 months ended. So from a top line perspective, the company, it is growing very quickly, but revenue growth is only one side of the story. Again, we don't just take revenue as the only consideration or the only thing that we look at whenever we analyze or do our own, whenever we do our own due diligence and we read over a quarterly report. So with that being said, we got to also talk about the losses, because when we move down the income statement, you're going to see here that this is where risk becomes much more obvious, because Inflection, it reported a GAAP operating profit of approximately $29.9 million in Q2, comparing that with a loss of approximately $10.4 million in the previous year of 2025. So while revenue is increasing by roughly $8.3 million year over year, the operating losses increased approximately $19.5 million. So, and for the first 6 months, you're also going to see here, you're seeing a similar trend in the sense that operating losses from operations are growing at a faster rate than revenue is growing, because you're going to see here for the fiscal year of 2026, for the first 6 months of 2026, loss from operations was reported at $6.29 million, comparing that to the fiscal year of 2025 at $17.2 million. So again, Q2 net loss, it came in at approximately $24.7 million. And for the first 6 months, net loss was approximately $54.4 million. And those are very large losses relative to the company's current revenue base. Now, again, we always like to look at the context, because we have to look at the financial numbers and the context along with it. Management, they did say that the higher operating loss primarily reflects increased operating expenses associated with investing in its strategy, along with significantly higher stock-based compensation. So we should look at the non-GAAP numbers as well. And one of the biggest things jumping out at me from these financial statements is stock-based compensation. And during the first 6 months of 2026, Inflection recorded approximately $20.4 million in stock-based compensation expense. That's comparing it with only around $1.9 million during the first 6 months of 2025. Now, that is an enormous increase. And it helps explain why there's such a big difference between the company's GAAP and non-GAAP results. For Q2, the GAAP operating loss was approximately $29.9 million, and the company's non-GAAP operating loss was approximately $16.2 million. Now, that is a substantial loss, so I don't think investors should simply dismiss the losses, because some expenses are non-cash. And at the same time, the GAAP number does make the underlying cash economics look somewhat worse than they actually were during the quarter because of that stock-based compensation. Quick reminder before we continue, if you're enjoying the content and want to connect with the community, check out the first link below for the free InvestQ community. And if you want access to advanced stock research and tools, the second link is a Prophecy 7-day trial for just $7. And last, if you want daily market updates and behind the scenes content, follow me on Instagram using the third link in the description. Now, let's get back to the video. And there's also another side to the stock-based compensation that investors need to remember. It may be non-cash from the company's perspective, but issuing equity compensation can still create dilution for shareholders. So it's something that I'm going to be continuing to monitor. And speaking of dilution, I want you to take a look at the share numbers. Quick reminder before we continue, if you're enjoying the content and want to connect with the community, check out the first link below for the free InvestQ community. And if you want access to advanced stock research and tools, the second link is a Prophecy 7-day trial for just $7. And last, if you want daily market updates and behind the scenes content, follow me on Instagram using the third link in the description. Now, let's get back to the video. So let's just scroll down here, and when we look at Inflection's balance sheet, you're going to see here that approximately 224.7 million common shares issued and outstanding as of June 30th, 2026, compared with approximately 17.4 million at the end of December 2025. So a major portion of that change is connected to the company's go public transaction and capital structure. So I wouldn't look at the number and automatically assume Inflection simply diluted existing public shareholders by more than 10 times through normal stock offerings. And that's not proper interpretation, but it does highlight why investors need to understand Inflection's post-transaction share structure when evaluating the stock. And the weighted average share count used to calculate Q2 EPS was approximately 219.7 million shares. Now, here's where things get pretty interesting, because Inflection, it ended June with approximately $59.3 million in cash and cash equivalents. And sorry, excuse me, guys. But that's only part of the actual picture regarding liquidity. The company also reported approximately $417.7 million in current available for sales securities. And total current assets were approximately $500.3 million. Meanwhile, total current liabilities were approximately $53.5 million. So despite the substantial operating losses, Inflection does appear to have a significant pool of liquid resources, and total assets were approximately $641.5 million at June 30th of 2026. Now, that's dramatically higher, especially when you compare it to last year, or to December 31st of 2025. That number of total assets was only at $113.2 million. So this isn't a situation, in my opinion, where I look at the company losing tens of millions of dollars and my immediate conclusion is that they're able to run out of money, or that they're about to run out of money. They have substantial liquidity, but that doesn't make the cash burn irrelevant. And during the first 6 months of 2026, Inflection, it used approximately $6 million in operating cash flow. And this is a really important distinction to make, in my opinion, because just remember that the company, it did report a $54.4 million GAAP net loss during that same 6-month period. Yet, actual cash used in operating activities was approximately $6 million, and that is a massive difference. And if you're asking why, the answer would be that because a significant portion of the accounting loss consisted of non-cash expenses, including that roughly $20.4 million in stock-based compensation. And there were also major changes in working capital. So again, the GAAP losses are real and absolutely they should not be ignored. But if we're trying to evaluate Inflection's near-term liquidity position, I think operating cash flow provides important additional context. And you might also notice something crazy on the cash flow statement, because if we scroll down, what you're going to see here is if we look at the net cash used in investing activities, you're going to see here that it was reported at $474 million. At first glance, investors, when they take a look at that, they might get the feeling that it sounds somewhat horrific. That's the best way that I can describe it in the way that I speak. But when you look at what's actually happening, approximately $529.7 million went toward purchases of available for sale securities, while approximately $60.2 million of those securities matured. So this isn't the company simply buying nearly $500 million, building quantum computers. A substantial amount of cash was essentially being moved into investment securities. That's why it's important not to take a single cash flow number out of the context. And coming back to the updated full year outlook, we're going to see here that Inflection now expects approximately $45.1 million, comparing to what they initially expected, around $43 million for the rest of the year for fiscal year 2026. But once again, management specifically says that this increase includes the non-cash accounting-based revenue adjustments. And the company also says there are no changes to the previously provided assumptions underlying its expectations for business performance in 2026. Now, that's probably the most important sentence in this entire release, because it tells us that management, they're not necessarily saying that our business suddenly got stronger, so we're going to raise our forecast. They're essentially saying that the accounting treatment changed, so the amount of revenue recognized during 2026 also changed. And that distinction needs to be made very clear when investors do read this report. So, me personally, after doing my own look through of the Q2 report, what I liked about it is revenue growth is extremely strong, as we saw, and Q2 revenue did increase approximately 157% year over year. And management does say that the growth was entirely organic and entirely generated from quantum. And the company, it does now expect approximately $45.1 million in full year revenue. And Inflection, it also appears to have a substantial liquidity position following its go public transaction. And fundamentally, the company is operating in one of the most interesting areas of technology right now. Now, INFQ describes its business as developing neutral atom solutions across quantum computing, networking, sensing, and security. And its systems are being used across government and commercial markets, including defense, space, energy, finance, and telecommunications. And if quantum computing commercialization continues accelerating over the next decade, that's obviously a massive potential market. Now, on the flip side, when I'm covering, because I just talked to you about right now what I liked about the report, when I look at the things that personally concern me, and when I say concern me, I'm not a shareholder of Inflection, but I guess is concerning in the report when I look at both the bull and the bear case and the opportunities and the risks, is this is nowhere close to being a low risk company. The biggest issue for me right now is the relationship between revenue and expenses. You're looking at approximately $13.5 million of quarterly revenue against $30 million of GAAP operating losses. So even after making non-GAAP adjustments, the company still reported an operating loss of approximately $16.2 million, and R&D spending is rising. Research and development spending is rising. SG&A spending has increased substantially, and stock-based compensation has also exploded. And the company remains far from GAAP profitability. And there's also the accounting adjustment itself. Management, it characterizes it as immaterial, and they say that there is no cash impact, and says the underlying business has not changed. So that is reassuring. But whenever a newly public company has to revise previously reported revenue recognition and file its 10Q late, in my opinion, I do think that is something that investors should pay attention to. Now, Yes, that is something that investors should pay attention to, and I wouldn't automatically treat it as a red flag, suggesting that something is fundamentally wrong with inflection, but I also wouldn't completely ignore it. And going forward, I want to see clean financial reporting and no pattern of additional accounting adjustments. So, overall, I think this update is much more nuanced than simply saying inflection raised revenue guidance because, yes, the reported Q2 revenue did increase, from the numbers we saw here from 12.6 million to 13.5 million. And yes, reported full year revenue guidance increased from 43 million to 45.1 million, but those increases resulted from the accounting adjustment involving the timing of revenue recognition on the two government contracts. So there was no corresponding increase in cash, and management says there was no change in the underlying assumptions for its 2026 business performance. That's extremely important that is something that you should understand. And at the same time, the underlying quarter still showed some legitimate strengths with revenue. And again, I did mention that there are concerns as well. So let me know what it is you think about INFQ. Is there anything that I missed? Anything that is there anything I missed? Anything else you wanted me to cover in this video? Let me know in the comment section below. I'm open to all positive and negative feedback. And also, feel free to hit the like and subscribe button if you did enjoy the content. And again, if you are looking for tools to help you with your investing journey, check out the $7 7-day trial for the Prophecy app. And lastly, we are getting close to the first milestone of hitting 1,000 subscribers. So for all of you that do wish to support me and do enjoy the content, feel free to smash the subscribe button. But with that being said, guys, InvestQ out, and I'll see you on the next video.